Okay, very good morning. Welcome to the briefing then for Friday, the 22nd of July. For some of the month 3 guys, final day. So let's remain disciplined and stick to the the lessons that you've learned from your mentor Bill, and I'm sure he will see you through perfectly fine to finish off your course. So taking a look at where things stand at the moment, I think let's just start chronologically with the US session first. We did finish in the Dow down 0.4%, the SPOOS was down 0.4%, similar margin with the Nasdaq 100 down 0.2%. So it was a negative close on Wall Street last night. We also saw a decline in crude oil, which also did weigh on the energy sector, and as such then weighing on the SPOOS as a whole. Now, some of the reason firstly for the sell-off yesterday, let's start with that. And really it started with the Bank of England and Christine Forbes, first of all. So she's one of the monetary policy committees of the Bank of England, and at the moment, if you rewound the clock around 24 hours, we were very much expecting pretty large-scale monetary easing or fiscal stimulus across most of the major global central banks, that being the Bank of England, the ECB and the Bank of Japan. However, in the last day then, we heard from Christine Forbes, and she said, better to keep calm and carry on, and the same applies to monetary policy, i.e., taking no action, remaining calm, and then waiting to digest information coming in post-Brexit to then make a more informed decision on policy. So more hawkish. Then you had Bank of Japan's Kuroda come out with the big comment of the day in a BBC4 radio interview when he said that there was no need and no possibility for helicopter money. And then you instantly saw Japanese yen strengthen, and equities at the time saw a considerable spike lower. And then you've had the ECB, and if anything, almost, we'll look at the move in a bit more detail, but status quo. Essentially, they've just suggested that they will still take action. However, they've delayed that, and now it's going to be a case of waiting until September, because there is no August meeting from the ECB. So we've kind of taken a slightly more, I wouldn't say hawkish, but less dovish setting now from the central bank from a policy perspective. And that's why you started to see a bit of a pullback then from these most elevated levels yesterday in the stock market, stateside, because looking at the underlying fundamentals on individual company basis, and earnings perspectives and forecasts going forward, going for profitability, obviously there's a lot of underlying negativities there. But equities have been pressing these all-time highs predominantly on the back of the fact that central banks are somewhat propping up the market with the stimulus that they're going to provide. And if they start to pull that away, then there's going to be real concerns then that these overinflated equity levels, that we could then see a bit of a correction. So I think that's kind of explaining a bit of why we pulled back and finished in negative territory in the US yesterday. That fed through into the Asian session. We did have a generally negative session there. A couple of comments though updated from Japan. So you had stimulus package talk again of up to 30 trillion yen was doing the rounds out of local press. But LDP's Inada, who rebuffed any discussions with Chief Cabinet Secretary Suga of the size of the stimulus package, saw a bit of a pullback in dollar-yen. But overall, people are still expecting forthcoming stimulus package from Japan, despite the comments from Kuroda. Again, important from those Kuroda comments from yesterday, although they have drawn attention, they are over a month old, it came to light, after they actually hit the wires. Looking elsewhere as well, you've had Japanese Premier Lee speak overnight, called on world leaders to step up macroeconomic policy coordination. I thought that was quite just a generally interesting comment, because I think in order to keep the market up at these elevated levels, it is important. China is a real important piece of the puzzle, and their ability to come in and fiscally stimulate their own economy is going to be key as well, to just demand globally for central banks going forward and the global economy. So let's just take a quick look at the ECB, break down exactly what it is that happened yesterday. Really a fairly contained event. And I would argue that very well managed by Draghi overall. I did think that there was a bit of a fear that I thought there was no need really for the ECB to rush into anything, but given the market is very much expecting easing to come, I thought it might be quite difficult for the president to really balance the tone to just essentially delay people in their expectation of forthcoming stimulus, but he managed to pull it off with aplomb, really. So looking at where we initially moved here was the upside candle. I'm looking at euro dollar here in the top left. And that comment came predominantly on the back of the fact that he seemed to be more concerned about Italian banks than Brexit. He commented very early on in the press conference about the resilience of the Eurozone system and the various programs that have been put in place. In the wake of the EU referendum, the economy has been relatively robust. So that to me immediately signaled the fact that, well, definitely there's no forthcoming real big announcement in this press conference, and it led to the idea of then kind of delaying very much to meetings coming up in the next few months. So euro initially rallied, broke through R1, found some resistance and tested a few times on that R2 level, before then pulling back, because overall the tone was very much just a repeat of previous meetings gone by. Still downside risk to the economy, inflation still tracking very low, i.e. there is still easing coming, but actually some of the biggest moves happened in the banking sector and for some of the peripheral banks, because Draghi overall helped the whole banking sector by suggesting that a state backstop was a very useful way of dealing with non-performing loans. Obviously that's the key area when it comes to talking about Italy. In terms of Deutsche Bank, I've been reading their kind of assessment and view at the moment. They do not think a deposit rate cut is appropriate given the pressures on banks. Instead, they expect a 9 to 12 month extension of the time frame of QE program at the next meeting in September, as well as complementary measures to ensure this is credible by making sufficient assets eligible for the program. Again, as per the discussions we had yesterday, you can see that there's what I would deem as several facelifts the QE program can go through before we then start to entertain the idea of any more, let's say, innovative programs from the ECB other than QE. So that was kind of the ECB. Interesting to see then from where we are now, trading at around 110.50, to where we were when the ECB press conference started. We're pretty much at the same levels despite the movement that was seen yesterday. So I think as far as the ECB is concerned, status quo for the time being. A couple of other things you've had this morning, just to be aware of. Vodafone, one of the bigger FTSE names, have reported first quarter service revenues that beat analyst estimates amid gradual improvements in its European mobile phone businesses and growth in developing markets. So equities initially, futures did see some downside just following on from the negative tone, the close in Wall Street and overnight in Asia. But we've seen a bit of a pullback from the most depressed levels. Again, things like the Vodafone story will be helping things given they're a large weighted company within their index. Main focus though for today, if you're looking on your calendars, ultimately it's PMI day. Now, what I'm going to do is just start with taking you through each country and what we're looking at. Now, the country you're looking at here is Japan. And the reason why Japan is looking to embark upon these further stimulus measures. There's various reasons, but this being one of them. This is manufacturing PMI in Japan. And remember, with the PMI data, 50 is the marker, if you like, between expansionary manufacturing and contraction territory. And if you look at Japan, we've had 1, 2, 3, 4, 5th month now in a row of contractions within that sector. Hence the reason the government is being quite forceful in looking to prop up the economy. Now, looking further forward, we've already just had Germany come out, and we've had France already. So France, the manufacturing was slightly higher than expected, as too as the service number. You're looking here at Germany. It came in at 53.7, which was actually above expectations, albeit slightly down from previous, but you can see fairly decent performance here comparative to the last 12 months. Looking forward, we'll get the UK at 930, and likewise that's been on a progressive improvement, having got back above into expansionary territory in the month of May. June then added to that. It will be interesting then to see what this data comes out with in regards to this being the preliminary July reading. So I would imagine then it factors in some of the post-Brexit data. So how much has the UK been impacted? These will be important for the Bank of England to make their assessment of policy thereafter in August. And then this afternoon we get the US version. This has been slightly more worrying, I would say, because of all the central banks, it's not about the Fed cutting or expanding policies, it's about the Fed delaying rate hikes. And this number has been uncomfortably close to the key 50 level. I think the Fed will be wanting this number to be more solid print as it was last month. So that's kind of your focus for today. One thing that I'm just seeing at the moment while I'm speaking, just taking a look at gold. So seeing a bit of a decline in the overnight session, just on the back foot, down around $9 now in the session at the moment. Yeah, I think the fact that, you know, if anything, if these central banks start delaying monetary easing, then that's going to go against fundamentally any near-term gains for gold. But certainly that's just talking on intraday at the moment. Keep in mind the dollar index has just been creeping higher as I've been speaking, which is also going to add some weight. Likewise, crude oil tracking slightly lower this morning. We're down around 40 cents at the moment. Again, a bit of a continuation from the sell-off we saw from yesterday afternoon, and then just printing new lows as I speak. So factors to keep in mind: if these commodities continue to track lower, that's obviously going to weigh on the related material and energy names, should that take some more momentum on the downside. But again, service PMIs, manufacturing PMIs, they're your main focal point for today. Otherwise, it's fairly quiet. You've got the G20 happening in Chengdu in China, so that's something to watch over the weekend for any commentary, but not expecting any great action to come out of that. Okay, going to wrap things up there, fairly short and sweet. I'll try and make my way round to each group and have a conversation. I know new guys having a trading competition today, so good luck with that. And for the rest of you, enjoy your trading day. Thank you.